Is the United States at risk of another housing market crash? As more signs indicate that the housing market is on an upward trend, many people are wondering if we are entering a housing bubble. Will the market crash or at the very least deflate in the near future? Welcome to the Fancy Investor channel. Watch until the end because you really need to understand this real estate knowledge. This video is for new and experienced real estate investors and home buyers. Hit subscribe if you're new, it really helps us out. The housing market appears to be accelerating as home prices continue to rise. The national median listing price increased by double digits in April, reaching $341,600. And despite of the 19.1% increase in mortgage rates from a year ago in April, buyers are not backing down. Are we about to enter a housing bubble? The last time the housing market in the United States looked this vicious was from 2005 to 2007. Then, home values plummeted with disastrous results. When the real estate bubble burst, the global economy experienced its worst decline since the Great Depression. Now that the housing boom is under threat from rising mortgage rates and the possibility of a recession, buyers and homeowners are asking a familiar question. Is the housing market so hot that it's about to crash? Housing economists agree that prices will fall, but not to the extent that homeowners experienced during the Great Recession. The personal balance sheet of homeowners are much stronger today than they were 15 years ago, which is a clear difference between now and then. The typical mortgage borrower has excellent credit, a substantial amount of equity, and a fixed-rate mortgage locked in a rate well below 5%. As a result, no foreclosure crisis is on the horizon. Builders recall the Great Recession all too well, and they have been cautious in their construction pace. As a result, there is an ongoing shortage of available homes for sale. Millennial housing demand is increasing, with Gen Z close behind. The number of potential home buyers is plentiful, with millennials and younger Americans accounting for half of the U.S. population, or 166 million as of July 2019. This is significant because according to the National Association of Retailers data, first-time home buyers account for 31% of all home purchases. Furthermore, the majority of first-time buyers are under the age of 40, indicating that the buyer pool is large, a good indicator that demand will remain strong, especially given that housing inventory is at historic lows. We will not experience a downturn because the housing market has experienced little increase in inventory over the last 10 years. In a few years, Generation Z will be 30, and they will be more financially prepared to become homeowners than millennials were at their age. This means that demand for homes will remain high, if not higher, while inventory will lag behind. Drop a like to help push this video. Now let's jump back in. Supply is unable to meet demand. The extremely low supply is also boosting the demand and driving up home prices, which is another reason why housing experts believe the market will remain strong for years to come. The primary reason home prices have risen so rapidly is a supply-demand imbalance. After not building nearly enough houses over the last decade, home builders will need several years to add enough new supply to balance the market. The months of supply in a balanced market would be around 6 months, the time it would take to reduce all homes for sale at the current sale pace. However, the current market has only 1.7 months of supply, indicating a significant imbalance in favor of sellers. What new home buyers should do. In today's market, home buyers must make difficult decisions. Predictions indicate that home prices will continue to rise while new home construction will lag, putting buyers in a housing crunch for the foreseeable future. For some buyers, this means relocating from large cities to more affordable metro areas. Others will have to stretch their budget to make do with less space or other amenities. Then there are buyers who are willing to take a chance and waive important contingencies such as the home inspection in order to increase the value of their offer. This may end up costing them more in the long run if the house has major problems that were not detected and fixed by the seller during the inspection. On the other hand, securing a home now, even if it means foregoing other purchases, may result in future savings if home prices and equity continue to rise. They may also save money by purchasing a home and locking it in a rate before both interest rates and home prices rise. However, the opposite can be true if there's a risk that limited supply combined with rising inflation will harm the housing market and cause prices to fall, especially if the economy enters a recession. If we do not address housing supply shortages, we risk fueling the fires of inflation rather than extinguishing them. The result could be stagflation, a term most of us haven't heard in a generation, high inflation, and an economic downturn. What is an underwater mortgage? If home prices fall suddenly, buyers may find themselves with underwater mortgages, which means they must either stay in the house until the market recovers or sell and lose money. While housing experts believe this scenario is unlikely, it should not be dismissed. This comes into play when buyers are forced to compete in bidding wars or pay more than the appraised value of a home. While this tactic has its uses, it must be carefully considered whether the home, neighborhood, and time you intend to spend in the house are worth it in the long run. People who are purchasing their forever home have less to fear if the market reverses, because they can ride the ups and downs of the market. Buyers who plan to move in a few years are more vulnerable if the market falls. That's why it's critical to look for a realtor and lender who are experienced housing experts in your desired market and whom you can rely on to provide sound advice from the start. Is buying a home during a recession worth it? Buying a home during a recession will generally get you a better deal, as the number of foreclosures or owners forced to sell to stay afloat rises. More homes become available on the market and home prices fall. However, the next recession will be unlike any other. Each buyer will be in a unique financial position. If you work in hospitality, for example, your current financial situation is vastly different from that of someone who is able to seamlessly transition into working from home. Only you can determine whether purchasing a home during a recession is feasible for your family. Pros of buying a home during a recession. During a recession, the Federal Reserve generally lowers interest rates in order to stimulate the economy. As a result, banks' rates, including mortgage rates, are reduced. A lower mortgage rate will result in you paying less for your home over time. It could be a significant savings depending on how low the rate goes. You can get the best deal on properties during a recession. Working with a realtor who understands the local market is more important than ever during a recession. Connect with realtors in your area who offer competitive pricing and can help you one-on-one. Thank you for watching until the end. Drop a comment and let us know what you want to see next. You can always stay up to date with us by visiting our website, thefancyinvestor.com. Hit subscribe now so you don't miss any future uploads. Let's build our community together. Share this video, spread the word. This is the Fancy Investor Channel. Thanks for watching.